Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. All right, who's ready for July? Did you guys know July is historically a great month for U.S. stocks? Here's why this year might be different. The U.S. stock market is on pace to finish the first half of 2024 on a positive note, with a rally in some of the world's largest tech companies propelling major stock indexes to multiple all-time highs. If the past is any guide, the good times for U.S. equities may keep rolling into July, but not every stock may enjoy this summertime rally. Since 1928, July has emerged as the best month of the year on average in terms of stock market performance. Over that time frame, the S&P 500 has experienced a gain of 1.7% in July and finished the month higher more than 60% of the time, according to Dow Jones market data. Such strength inevitably stirs talk of a summer stock rally, but investors should beware the hype, as it has historically been the weakest rally of any season, said Jeffrey Hirsch, editor of the Stock Traders Almanac and Almanac Investor newsletter. Now, what I want my subscribers to know is July begins what is usually the Nasdaq's worst 4 months of the year and has averaged a monthly gain on that index of less than 1% since 1971. Over that time frame, July has been the sixth best performing Nasdaq month according to Dow Jones market data. So join me in celebrating the bull, but watch out for the swan. I mean the bear. All the big three indexes closed down Friday, even after the big bullshit PCE data group came out, designed only to convince politicians that inflation is slowing. The small caps had a green day as the Russell 2000 closed at 2047, up 0.46% for the day. Crude remains over 80 at 81.46, and gold hung on to 2300 at 2336.90. From Wall Street breakfast, the S&P 500 snapped a 3-week win streak, but the bigger story was the benchmark index closing out the first 6 months of 2024 with a whopping 14.5% advance. The stellar H1 performance that saw the S&P go on a record-breaking spree was largely driven by a blistering rally in tech stocks over the artificial intelligence craze and progress towards a scenario where the Fed Reserve can finally begin to cut interest rates. However, this week's slight decline in the index shows how recent concerns about market breadth and the outsized dominance of mega-cap tech stocks have weighed on investors. For the week, the S&P dipped 0.1%, while the blue chip Dow also slipped 0.1%, but the Nasdaq added 0.2%. Since this is the short squeeze edition, let's start off with the most shorted stocks at the Yahoo Stock Screener. I've got the region set for US, price intraday greater than $1, average volume over 3 months greater than 200,000, and the exchange selected is the New York. I see 1,646 results. Let's check them out. And guess what? GME and AMC have dropped off the top 25 on this list. I see Cinemark in the 14th position, but no AMC or GameStop. Guess we can all stop worrying about the short sellers, right? Now on page 2, I see AMC has dropped to the 27th position and Archer has moved to the 39th spot, but still no GME. It has dropped to the 110th spot on this list. Shorts have been busy covering their trade on GameStop. Must be worried about something. Is it Roaring Kitty or what Ryan Cohen might do with that $4 billion war chest? Well, this is AMC's big chance at the box office, guys. July 2024 box office preview: Deadpool and Wolverine, Despicable Me 4, and Twisters will heat up theaters. June has thankfully bounced back from a weaker start to the summer movie season, but July has 2 or 3 offerings that could end up being the biggest films of the year going by their predecessors. Despicable Me 4 drops on July 3rd. Twisters, July 19th. Deadpool Wolverine on July 26th. Let's put them on the calendar. AMC started options expiration Friday with a dip down to 467, got as high as 499 on sudden late day volume to finish at 498, up 20 cents or 4.18%. We barcoded down after hours, finishing that session at 488, giving back 10 cents or 2.01%. Did anyone else notice the flurry of volume just before and after the close? I put an arrow on the chart there so you can see it. Maybe that explains why AMC Entertainment was ranked number 1 on the large market on close stock order imbalances chart. Thank you, Donahue George, for pointing that out. GameStop started its pre-market with a huge crime candle spike to 26.48. I got really excited, but then I remembered meme stocks trade on the Tijuana Stock Exchange, not the New York. After that, GME got as high as 26.17, but was muscled down and then set a low of 24.31. Again, a big volume close to finish at 24.69, down 40 cents or 1.59%. Look, I don't know what the real short position against GameStop is, but I have a comment for my GME shareholders. We are going to endure a landslide of negative financial media attention, and for good reason. This company is now the most dangerous SPAC in the world, and they want you to forget that GME has better valuation metrics than all the NASDAQ 100 companies because it has so much cash on hand. Sadly, whatever Ryan Cohen does may also be the only way out for AMC shareholders as well. We'll see. But just look at these headlines. GameStop stock is like gambling. GameStop stock down as veteran trader slams Roaring Kitty. This kid turned 50,000 into $1 billion. Why do you think we care what a veteran trader has to say? Cohen's silent treatment. Why GameStop stock investors are flying blind. GameStop's $2.1 billion stock sale taxes shareholders and hurts, blah, blah, blah. Don't expect this to stop until Ryan Cohen makes his announcement. Look, I'd like to point out just one thing for GME shareholders. Robinhood defies the SEC by forking over $200 million for a crypto exchange. This is when Robinhood bought Bitstamp, right? $200 million, guys. Ryan has $4 billion. He could start or buy a crypto exchange. He could start or buy a retail brokerage firm to compete directly with Robinhood. It could come with all the features we appreciate, like routing orders to lit markets or disabling share lending. He could start or buy an online casino or something like DraftKings for sports betting. He could literally start or buy all 3 separate businesses with GameStop as the parent. He would have millions of clients overnight. I know I would open an account just to be an asshole. Archer Aviation started out its Friday with, guess what? A crime candle, pre-market, complete with a spike to 367. Was driven down to 333, and again, heavier volume at day end pushed the stock up to close at 352, up 3 cents or 0.86%, and after hours added another 3 cents. Is anyone else picking up on these trading similarities? At the time of this recording, AMC finished the week with max pain at 450 for the July 5th maturity. I see 850,000 shares available at a cost to borrow of 1.72%. GameStop finished the week with max pain at 24. I see 1.5 million shares available with a fee of 0.60%. Archer finished the week with max pain at 450. I see only 500 shares available with a cost to borrow rate of 21.85. I wonder if the CAT system is picking any of this up. It's been going on for years. Market makers and bad actors push the stocks down early and then let them slowly rise into the close. But miraculously, they finish under or near max pain, making and or saving themselves millions, possibly even billions of dollars when the volume is up. So in my opinion, this is coordinated manipulation of equities, trading as a consortium. So that makes it racketeering. I'm convinced some of the stocks they're borrowing don't even exist. So that's naked shorting. The barcoding and crime candles indicate misuse of the dark pools and algorithms. And of course, there's obvious spoofing and layering going on. Add to all that paying people to write hit pieces in the financial press and misusing the married put strategy, and you now have what I call the new organized crime in America. The dark pools for AMC must be broken because we did 51.23% of the day's volume on the exchange we're listed on for a change. Must be that new CAT system at work. AMC's short squeeze score at Fintel.io stands at 68.49. Only 11.4% of GameStop's volume was performed on the exchange it's listed on, and its short squeeze score stands at 66.18. 41.12% of Archer's volume was performed off exchange. That's an awful lot of block trading for a stock that size. But Archer's short squeeze score has risen to 75.67. I'm telling you guys, Archer is looking more squeezable by the minute, not investment advice or advisor. The short squeeze score comes from Fintel.io. Go and check that site out when you get a chance. The score is a result of a sophisticated multi-factor quantitative model that identifies companies that have the highest risk of experiencing a short squeeze. The scoring model uses a combination of short interest, float, short borrow fee rates, and other metrics. The number ranges from 0 to 100, with higher numbers indicating a higher risk of a short squeeze relative to its peers, and 50 being the average. Okay, so depending who you ask, I've got short interest for AMC at 52.94 million shares. Short interest ratio, 3.44 days to cover. Short interest as a percentage of float, 14.43%. Off exchange short volume ratio for AMC, 43.56%. GameStop, short interest, 44.72 million shares. Short interest ratio, 1.98 days to cover. Short interest as a percentage of float, 14.28%. And off exchange, short volume ratio of 39.45% for GameStop. Archer, short interest, 54.45 million. Short interest ratio, 6.91 days to cover. Short interest as a percentage of float, 26.4%. Off exchange, short volume ratio, 65.8%. This data typically is of June 15th because our enemies are permitted to conceal their real positions. Also, if you're tight with Gary Gensler because he used to be a partner at Goldman Sachs, you can mismark 60 million short orders as longs without fear. FINRA fined Goldman only 3 million. That's a bargain at only 5 cents per violation. Believe it or not, institutional ownership is useful to know on short squeeze plays. Yes, guys, I know they loan out our shares, but more buyers than sellers and higher institutional holdings is always better than less, in my opinion. I know some of you disagree, but what I'm really looking for is spikes in institutional ownership. New buyers coming in for some action. AMC's institutional ownership is rising, but its fund sentiment score from Fintel is only 13.94. According to NASDAQ, 29.32% of AMC is owned by institutions. Okay, so let me get this all straight. According to Generative AI, as of June 28, 2024, AMC has 295.59 million shares outstanding, which is a 91.72% increase from the previous year. Now, Capital IQ says we've got just over 368 million shares outstanding, so let's use that higher number. Institutions reportedly hold a total of 85.8 million shares, or 29.32% of the float. Now, If there are only 3 million individual AMC shareholders left, there used to be over 4 million in 2021, that own an average of only 400 shares each, that means they hold 1,200,000,000 shares. Okay, I want you all to take a screenshot of this slide. Go to X, formerly known as Twitter, and tweet to Charles Payne, Charlie Gasparino, Gary Gensler, Finra, Adam Aaron, your favorite YouTubers, that the float allegedly stands at 368 million. But if there are 3 million individual shareholders of AMC left that only own 400 shares apiece on average, that means we hold 1.2 billion shares, not including institutions. Or am I making a mistake? Do AMC individual shareholders plus institutions own 3.5 times the float? If I'm mistaken, it's okay. I don't mind making mistakes and being corrected. It's part of doing research. But maybe now you know why certain people on Twitter didn't want you to participate in the AMC Project Popcorn survey, because that kind of evidence wins class action lawsuits, my friends. Now, I've got a question for you remaining Adam Aaron fanboy saps. If this is true, do you think your piece of shit CEO knows it? Because I bet he does. I need you to hit the like button and share this one on your social media platforms. Guys, this is a lot of work, and I don't have a Discord, I don't do lives, I don't get super chats, I don't sell coffee mugs or t-shirts, so I need to get this kind of information out so these people can see the evidence we're gathering. GameStop's institutional ownership chart is pretty steady, but its fund sentiment score from Fintel.io is only 13.49. I've got institutions owning 24.89% of GME at the time of this recording. Archer Aviation's institutional ownership is rising nicely, and the fund sentiment score is rising with it, but still low at 21.51, which I find surprising because NASDAQ has institutional ownership at nearly 45% of the float. Guys, I have one parting comment for you on Archer Aviation. It's one thing to get your FAA certification, which they have. It's one thing to have an agreement in hand that enables access to key hubs for United Airlines and a network of private airport terminals in the U.S. to operate commercial air taxi rides using eVTOLs, which they have. But guys, think about it. People in San Jose will fly to San Francisco in 10 minutes instead of driving an hour and 15 minutes, right? People in Oakland will go to Napa Valley in 12 minutes instead of driving an hour and 20 minutes. Now, this is not financial advice. I'm not a financial advisor. One of these things could crash. It could be over in a day, right? I will never tell you to buy, sell, or hold any stock or cryptocurrency. But I believe the people in California, especially California, are going to eat this thing up. Okay? It's electric, no emissions, barely any noise. They're going to love this crap. In fact, I think Archer has the potential to become an adverb. In other words, you know how people say, yeah, I'm going to Uber downtown? You might Archer to Napa Valley for the weekend one day. I'm just saying, I think it has a ton of potential, and the shorts are making a huge mistake on this one. I want my subscribers to be aware we are 81 days to the second day of the September Fed meeting. That's when everyone is convinced we're going to get a rate cut, right? We are also approximately 131 days from the election date of November 5th. I feel these are the most important dates on my calendar so far. Would you agree? These are going to be market-moving days and even weeks, no doubt in my mind. But what will happen if we get a black or white swan event before the September Fed meeting or before the election? I believe there's a 30% chance of a swan event before September 18th and a 50% chance of one before the election date of November 5th. Let's review the potential swans on the next slide. Maybe you can help me add some. Now, most of my subscribers are apes, so this table includes black and white swan events that can affect us directly and not just the markets in general. Followers of this channel know where I stand. I think the bad actors on Wall Street have proven they can control AMC, GME, and other highly shorted stocks using illegal tactics at will, and the regulators will do nothing to stop them. But I also believe that a sudden white or black swan event that affects the leverage chains of our enemies, who are leveraged 60, 65 to 1, even higher, takes all the dirty tricks off the table, because the prime brokers that place the trades for the predatory short hedge funds will still margin call their clients, just like Archegos and Credit Suisse. So, under the heading geopolitical, obviously Russia-Ukraine. That's still going on, and we've recently learned North Korea may send troops to Ukraine. Then we've got China, Taiwan. China may still invade Taiwan. Who knows what that's going to do to markets if they capture Taiwan Semiconductor? Who knows what that's going to do to the chip industry? Then you've got Israel, Hamas. That's still going on, and now we've learned Iran and or Hezbollah may jump into the conflict. I also believe the 2024 election itself could be a potential black or white swan. Now, under the heading systemic or financial, we've got the commercial real estate crisis. It hasn't gone away. We really haven't dealt with it yet. Recently, we identified 282 U.S. banks at risk. We've got the de-dollarization trend coming from BRICS. We've got a $34 trillion U.S. debt spiral to consider. Ryan Cohen could make a sudden announcement about what he plans to do with that $4 billion war chest over at GameStop. Now, I've got to be honest, I feel that Ryan Cohen has been threatened. I don't know by who, but I think he's going to try to introduce that information with the least amount of impact on the market. But it may not matter, because if it's great news, I think GME could run and AMC would follow it. We could also get another significant roaring kitty post, a surprise, right? We could see the settlement of the case between the SEC versus Ripple. There's also what I call the derivative tsunami out there, very hard to deal with. There are also huge unrealized losses, not just on the books of the U.S. banks, but on the Fed Reserve itself. Go look it up. Elon Musk could debut his new peer-to-peer payment platform on X, formerly known as Twitter. That is scheduled for this year. And then there's the hidden, hedgy over-leverage. Securities sold, yet not purchased. Possibly billions of unreconciled synthetic shares. Who knows? But that's some of the swans that are in the air right now. Hey, before I do the calendar, I want to thank you all for sticking with me through this whole thing, especially you AMC apes. I know it's been awful for many of us to be proven right again and again, but to keep losing because Wall Street cheats, the regulators ignore it, and Adam Aron and senior management helped Wall Street hurt us and our stock price over and over again while making themselves millions. Win or lose, I will stick with you guys until the end. Now, Monday, July 1st, 9:45 a.m. Eastern Time, we'll see S&P final U.S. manufacturing PMI. On Tuesday, 9:30 a.m., Fed Reserve Chair Jay Powell will speak in Portugal. Wednesday, July 3rd, 8:15 a.m., ADP employment, 8:30 initial jobless claims, 2 p.m. they'll release the minutes of the Fed's June FOMC meeting. Also, Despicable Me 4 drops in theaters. Kind of important. There's going to be, it's more than just selling tickets and popcorn. A lot of merchandise involved on this one. Thursday, July 4th, nothing scheduled. Of course, the July 4th holiday markets will be closed. But Friday, July 5th, 8:30 a.m., U.S. employment report and rate. That's the biggest event. Now, so far next week, I've got CPI on Thursday the 11th and PPI on Friday the 12th. Also, I'd like to point out that this month's Fed meeting happens at the end of the month, July 29th and 30th. Now, I'm aware you can get this information anywhere, but remember the context of this channel. I'm looking for days where our enemies are already dealing with and digesting important economic data and releases, and I'm rooting for a black or white swan to swoop in and catch our enemies with their pants down. That's the only path to victory on any of these trades, and for good reason. Our enemies can cheat with impunity, plain and simple. Okay, you can celebrate this, people. Judge dismisses SEC charges against Binance and CZ. Every time this man loses is a win for us. Don't ever be fooled by Gary Gensler. Don't ever believe because he supports something you support, like more transparency in the markets, that he's on your side. He's not. Never is. He is on Wall Street and Washington's side, and he thinks you're the problem, not predatory short sellers. He knows exactly what's going on, exactly what they do, and he will let them steal from you and not give it a second thought. He is a tiny man with a gargantuan ego, and the sooner he's gone, the better for everyone. He will go down as presiding over the most corrupt and unfair markets in this nation's history. Another thing to celebrate, New York Community Bank plans a 1-for-3 reverse stock split in July. That's the bank that Steve Mnuchin and Kenny Griffin saved and bailed out. It's down over 69% for the year. May it blow up and die. Thank you, Donahue George, for pointing this one out. And more good news from Bloomberg. High-speed traders, short sellers, face growing Asia crackdown. Thailand restricts certain types of trades as stocks languish. Market watchers caution restrictions can tighten liquidity. So the people that create liquidity out of thin air are worried about liquidity. That cracks me up. From the article, regulators in Asia have tightened the screws on trades popular among hedge funds as stocks slumped, an attempt to stabilize markets that some worry may end up stifling key strategies. Remember what I told you guys. When the United States starts banning short selling on banks and financials, that's your signal that the mustard is off the hot dog and shit's about to get real. Just my opinion from experience. This game has become about keeping an eye on your enemies and waiting for them to mess up. From CCN, Bitcoin basis trade gains hedge fund interest is a short squeeze brewing. Hedge funds are using the basis trade to profit from the gap between Bitcoin futures prices and spot prices. This involves shorting Bitcoin futures, selling high, and simultaneously buying spot Bitcoin, buying low. A surge in hedge funds entering the basis trade could trigger a short squeeze, pushing prices higher. And now you've got the prime brokers warning their own clients, the hedge funds. From Friday, Goldman's hedge funds head says it's time to cut portfolio risk. Probability of a drawdown is rising. Risks include U.S. fiscal deficit and narrow rally in U.S. stocks. After a blistering rally driven by the biggest tech stocks, pushing the S&P 500 to a string of all-time highs this year, it's a good time to tap the brakes, according to Goldman Sachs' Tony Pasquariello. Guys, we're waiting for them to get caught short in a rally or get caught long in a sell-off. That's it, because when you're leveraged to the sky, one mistake and you're all done. So if any of you are wondering what's the point of my research, why do I do it, it's this headline right here. Hedge funds took a serious hit in 2008. I study black and white swans because nearly 700 hedge funds were shut down in the first 3 quarters of 2008. That's according to Hedge Fund Research, a Chicago-based data firm. Now, this segment is a bonus for the people that stuck it out until the end of this video. This is from Penn Taxi. 10 reasons why air taxi is better than a helicopter. Check this out. Now, keep in mind, Uncle Frank is not a fan of electric cars, but I am in love with this contraption, and here's the reasons why. Number one, efficiency. eVTOLs are powered by electricity, which is much more energy efficient than fuel-powered engines of helicopters. This means that air taxi eVTOLs have longer ranges that can fly for longer periods of time, reducing the need for multiple refueling stops. Number 2, safety. Electric power is much less prone to mechanical failure than fuel-powered engines, making eVTOLs safer to fly. Additionally, eVTOLs have a number of safety features, such as redundant systems and advanced software that help to minimize the risk of crashes. People get mad at me when I say it, but I believe that Kobe and his daughter would still be alive if they were on an eVTOL instead of a helicopter. Just my opinion. Number 3, speed. eVTOLs are faster than helicopters, allowing them to cover more ground in less time. This means that air taxi eVTOLs can get you to your destination faster and more efficiently, reducing the amount of time you spend traveling and increasing your productivity. Number 4, cost. eVTOLs are more cost-effective than helicopters, both in terms of operating costs and purchase price. This is because they use less energy, have lower maintenance costs, and are more efficient to operate than traditional helicopters. Number 5, convenience. eVTOLs are designed for urban environments, making them ideal for travel within cities and other densely populated areas. They could land and take off vertically, eliminating the need for runways and helicopters and allowing for quick and easy access to your destination. Number 6, noise reduction. eVTOLs are much quieter than helicopters thanks to their electric power source and advanced aerodynamic design. This makes them ideal for use in densely populated areas where noise pollution is a concern. Number 7, reduced carbon footprint. Since eVTOLs are powered by electricity rather than fuel, they produce fewer emissions and have a lower carbon footprint than helicopters. This makes them a more environmentally friendly choice for air transportation. Number 8, vertical takeoff and landing. eVTOLs can take off and land vertically, eliminating the need for runways and helipads. This makes them ideal for use in urban areas where space is at a premium. Number 9, increased capacity. eVTOLs have larger passenger capacities than traditional helicopters, allowing them to transfer more people at once. This makes them ideal for commercial use, such as air taxi services, air ambulance services, and air tour operators. And number 10, advanced technology. eVTOLs are equipped with the latest in aviation technology, including advanced sensors, avionics, and software. This makes them safer, more efficient, and more convenient to operate than traditional helicopters. I made my case. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.